Okay, so it's Pardo from Pardo FX. Please subscribe if you like the overview for the coming week for some more ideas. So we're looking at the New Zealand dollar going into the week starting on the 2nd of February. Massive amounts of stuff going on in the world fundamentally, but we try not to look fundamentally. We try and just look at what the charts look like and what we think is going to happen. Now, New Zealand yen being the first one. Um, Fundamentally, I guess we have to sort of expect a strong yen, maybe a strong Swiss franc, based on what's going on with the tariffs. So people might want a safer place to put their money and put it into the traditional safe haven places. However, what we see on New Zealand yen is an established range, okay, that got rejected from, the demand point was rejected from last week, and therefore, because it shifted momentum, okay, so if I put the our EMA on here, there's a shifted momentum from that demand point, okay, reacted off the EMA, pushed up, it's coming down on the spike that happened towards the end of the day. But because we've seen that reaction, it's difficult to then say um, it's going to go short because price has pushed up essentially to this level and retraced back down. It's difficult to say it's going to go short based on the reaction from the demand. So I think the outlook is long until proven otherwise. If it had sort of come down to the bottom and then pushed up and tested here and then was sort of messing around here a little bit, maybe you'd expect it to go shorter. But based on the reaction, I think we could possibly look long. Uh, and then next, we look at New Zealand CAD. Okay, not much to say about this pair. I think this daily trend says it all. We had the reaction at zero point 0.8. It's pushed up. It hasn't really looked back. Pushed above 814, not 5. Retested on the daily and finished with the engulfing candle on Friday. Look at how the EMA 17 tracks on the daily. This could continue pushing all the way. I expect strong New Zealand, strong Aussie going forward. So um, probably a nice daily trade up there potentially. However, possibly could have got in that at the bottom. There's nothing really to talk about on that pair other than that. Um, Odd New Zealand is a difficult one because it's never a nice pair to trade. Okay, so I've traded this a couple of times last week. Didn't really get much out of it. It's a messy pair generally. It's a spiky pair generally. Okay, in a nutshell, you have this really strong demand and supply point over a long period of time. But it's just above 1.1. But what you have on the 4 hour chart is a flag coming out, consolidation coming out, and there we have the 500 EMA working really well to retract this, and the continued failures to get through it, and the 4 hour 17 EMA pushing price down continuously. So this was a good sell and hold situation, but I'm a day trader, so I can't really hold this. I was looking for the quick pushes down, hasn't happened. But the price action very much looks like you know, it's going to go down until you get some solid closes above the 500, the 17 here. It's got a bearish outlook on it. Um, Euro New Zealand. So if you look on sort of the daily here, what does it look like to me? Uh, it looks like to anyone else, it's at the top of the range, and it must come down. However, you go back in time, this is where it is nothing compared to where it's been in the past. Um, so just because it's here doesn't mean it has to come down. However, looking at sort of the price action, the push up, the down move, a period of intense consolidation, potentially like a peak higher than the previous ones, which on a flag is usually an indication it's going to come down. So it's going to be really interesting. And I don't think I'd really want to trade this. I don't think it's good enough, but it's going to be an interesting one to watch. And if we're saying that it's a flag and price has peaked slightly above the rest of the flag twice and is likely to then come down for the foreseeable future, you could interpret this break of 84 as the first retracement of a downtrend, which makes the range stronger. So 84 is a really strong area to trade. But if you look at how it's been trading over the last few weeks, it doesn't give you much confidence that it's actually going to pay dividends. But you could look to trade it and protect against the 50,618 confluence and put the stop up way above the wicks here. Remember, it's Euro New Zealand, so the spread will be big as well. So you've got to protect against that. There's a reasonable chance for it to drop to demand and get at least a decent trade, potentially further. If we're saying that it's the end, it's the peak of the flag, then potentially further. It's going to be an interesting one to see going forwards. GN slightly different because it's great confirmation for a buy coming up. So we have the peak symmetry here almost, okay, from the left-hand side of this structure, okay, after the reaction from the uptrend line, boom, up it goes. Where's it going to retrace to? Well, in an ideal world, it would look the same as the left. So you get this sort of triangle here. I'm not sure it's going to do that though, because we got the 17 and the 200 coming into play right on this demand point between the 38 and the 50. Where price has rejected consistently in the past. Okay, which means there's a very good chance it's going to go up at about 2.189. However, it's just as strong a play if it does push through the EMAs and down onto the 61.8, down at 2.184, because that's a genuine retest of the structure and is also nice from a peak symmetry perspective from the bottom of this triangle on the left. So either of these two places are a good long opportunity, I would suggest, and a good move as well. You get a good move off that, but yeah, it's really difficult to pick which one is going to be the one to really go for. New Zealand USD. So I traded this short last week, and I think for good reason. I mean, the reason I traded it short was it was on the underside of the 17 and the the 17 on the 4 hour and the daily. It hasn't really reached the area that I thought it would, 55. These peak demand point in the past, it seemed like if it failed to break above this line here, which it did because it gapped lower, yeah, there was always the possibility based on the 200 EMA, based on, if it's back in this range, that it was going to continue a next move down to 55. So a fairly strong trade set up there on that short-term reversal point. Didn't play out, but towards the end of the day, has pushed lower. So I don't know what the outlook, I don't know what's going to happen. What we could see is sort of a bit of peak symmetry where it is, or potentially at 559, about here, yeah, or the leg down. I think it's a difficult one to trade this week because, yeah, I'll probably want to keep away from, but that's sort of, I think it's going to keep going down, but there is plenty of areas for it to reverse. And New Zealand Swiss franc as well. Again, on the daily, you sort of see this massive flag, yeah, that's come out. We've traded it down a few times, just haven't been able to pick the top. And you should never pick tops. It needs to be really good confluence, really, to get into that. And last week, I think we saw it because you've got this downtrend line here. You sort of a break of the flag and then a test on sort of in three planes of flash. So if I go into the short time frames, you can sort of see what I mean. The two trend lines and the strong demand point coming together to say, okay, we can short it there because price won't go back through it. I traded it here. Okay, it's gone back up, took me out of break even, and then pushed short again, similar to New Zealand USD, similar to a lot of pairs on Friday. So the bias on this is definitely to continue going short on it. And that's it for the New Zealand dollar. Again, subscribe if you like these overviews. It gives you something to look at going into the markets when they open tonight. However, as we've seen the last few weeks, you can look all you want on a weekend. It doesn't necessarily, it's going to look the same on Tuesday when potentially you really start trading for the week. So it's you take it with a pinch of salt always.